Greetings, Dr. Jeffrey Scott here. This is my weekend market update. What a week, what a period we're in the market. We've got war in the Mideast. We've got Iran's refineries on fire. We've got Iran apologizing to its neighbors. Just wonder what the exit strategy that we have. Forever wars are not good, and this war is not helping the U.S. markets. So, markets are under pressure. Will they break or break out first? And although it certainly seems like they're going to break, I'll show you some data that says maybe not. So again, it's March 7th, 2026. It's about 7, almost 8 p.m. on Saturday. No futures to talk about. My name again is Dr. Jeffrey Scott. I am the Market MRI Pro at gmail.com. My Google group is called Top Down Trader. I do these videos to show people how to use my tools for top-down analysis. They're for educational purposes only. Anything I talk about should be in the spirit of education and not investment advice. The intent of the video, again, is to demonstrate tools. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to sell or buy any stock I mentioned. Trading stocks and options should be considered risky. You should always consult with your financial advisors. Market analysis in wealth charts will be out Monday morning. My Google group I mentioned is called Top Down Trader. It's the only mailing group I keep. That's how you find out about my live meetings, like the one that's coming soon. We'll be sending out limited seats available for November 5th and 6th, and likely we'll be partnering with my good friend John Person. 2-day meeting, more to follow. But I also give a discount on my software, and it's the best way to communicate with me on multiple fronts. Is there a recession in our near future? You know, there's always going to be a recession eventually. Whenever you cross over the zero line after an inverted yield curve, there's typically followed by these gray bars, which are recessions. They don't occur right away. We're kind of getting long in the tooth for it. Wouldn't be surprising at some point during the second year of a lame duck presidency around the midterms to see the economy slow. But right now, there's no obvious evidence that we have a recession. You could see that there really is nothing going on credit tightness, and that's typically going to start popping before we see a recession. The other thing is recessions usually occur when the Philadelphia Diffusion Index is at -20, and we are currently at +16, although we won't have another one for another 2 weeks or so. The big week on news and earnings. So first, it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. If you look at Monday, no news. Tuesday, lightweight. But Wednesday, CPI. Thursday, jobless claims and housing starts and trade deficit. And Friday, GDP and PCE and consumer sentiment. So this is considering not a non-Fed meeting week. It's a pretty busy week. And the lack of Fed speakers suggests we've gone into the quiet period. Plenty of earnings to come this coming week. I won't go into too much detail. There's not much to say. I see Adobe here, and I think about how the IGV has come up significantly, and a lot of the software stocks are improving, but still remains to be seen. Let's go to the charts. Kill this. So the winner on Friday is the VXX, up 13.71, closing just off the highs of the day at the 97th percentile. Everything else was down. Bitcoin led to the downside at 4.43 to the downside. It did have a massive recovery earlier in the week and still finished the week positive. You could see the Russell led on the day and on the week for the indices down 4% on the week, 2.29 on the day. Q's down 1.5, Spider's down 1.3%, and the Diamond's down 0.55. So a very difficult week in U.S. markets. You could see the new high, new lows at 52 weeks. New highs minus new lows are -9. We've had an increase in new lows and not much movement except down on the number of new highs. We'll have to start to see more of those before we believe that this market's actually improving. Down here, we could look at the S&P 1500, the NASDAQ, the NYSE, and we could see only 20% advancers in the S&P 1500, 31 in the NASDAQ, and 22 in the NYSE. When only 1 out of 5 stocks in an index are advancing, that is a weak day. If you look at the sectors representing the S&P 500s, the only things up were staples, defensive, and energy. Leading to the downside over 2% was tech, followed by materials at 1.9 to the downside, and discretionary at 1.8. Another really, really weak day. Cannabis led to the upside, then followed by China discretionary, China internet, aerospace and defense, ITA. Norway tech software was up 0.4 on the week. It was up 7.85. And if we look at where the biggest weakness was, everywhere: blockchain, semis, transports, copper, structural development, uranium, metals and mining, home construction, the list goes on. So it was a horribly weak day, and frankly, it was a pretty horribly weak week. Now, if you listen to my videos, we have been looking for this. We have been raising cash and talking about it, or protecting positions with puts, or entering contra ETFs, all the things that we've talked about over the last week. All different approaches, and typically it's a combination of approaches that we would do. Timing model, that's bad. Diamonds, Qs, Spider, Qs, Diamonds, and Russell all are in a sell signal, period. On the weekly, we have flipped to a sell signal on everything. Weekly Qs here, weekly Spider, weekly Diamonds, and weekly Russell. So if we've got 8 possible points to measure and all 8 are sell, we are in a downtrend. We are in a okay to short. I wouldn't be buying until we see some type of a reversal market. And to me, because it really is a bizarre market, in my opinion, I'm in cash, predominantly cash. Week. Now, if we go out even further to the monthlies, I don't think they've turned over yet. You can see you still have the greens on the monthlies. Now, how bad is it? Well, I looked at the guppy charts, and I don't talk much about them, but I look at them on my own. And a couple of things to point out here. If you look at these, up until perhaps the last week, the markets really hadn't broken down. And most of the things were not, I don't think anything was 8% down. And so you look at the Spider Weekly, it looks like it's rolling over, but it really hasn't broke down much. And notice the guppy charts are all the same lineup of the moving averages, and it's well above. Same thing on the Qs. A little bit more confusing here on the Russell. This is the one that's most recently broke below. RSP looks a little bit better than the Spiders, but it actually broke down this week. The equal weight Qs kind of look similar to the Qs. And the Diamonds also have been doing well, but broke down this week. What's remarkable to me is there's not more changes in those moving averages. So haven't broken down much. And, you know, it's interesting. And I made a comment about the other day about, can you form bottoms at tops? So many people keep talking about we're having a bottom, we're having a bottom, I'm looking for bottoming signals. We're not even in correction territory, although we got close to it on Friday. You need to be 8% down to have a correction. How do you have a bottom at a top? I still don't understand. Let's take a look at the US indices. So Spider on the daily, does it look like it's rolling over to you? It does to me. Now, reality is seasonality is about to start to pick up, and that's a positive. We got the 200 down here. That's probably a natural place for it to run to. We're going to have to get above the 100, which was support at multiple times. Could be resistance. We failed at it here. But boy, if we can break out above the 100, we probably roll up and get out up into new high territory here. I think that's one scenario. Another scenario is we go sideways, and the third scenario is we pull all the way down and see if we hold. I think we go sideways, but you still could break above. If we just quickly take a look at the weekly on the spiders, yeah, we just closed below the 50 week, but boy, it really hasn't broken down that far. I think it goes lower, but that's just my opinion. If we look at the Qs are going sideways. In fact, you could almost argue that the Qs are doing one of these things in a box, kind of like Nvidia. If we look at the weekly on the Qs, not really doing much, going sideways. Are the Qs done going up? They might be, but look what's coming in here on the weekly and about to come in on the daily. We're about to get to good seasonality. And typically the markets bottom in the month of March, so it's right where it's supposed to. So yes, weak, but not necessarily done. If we look at the diamonds, the same story as the spiders. It's now broken below the 100. Couple more days of weakness and seasonality improves. Is it broken? I don't know. It certainly has weakened, but I'd expect worst case it pulls down. You can see here the 50 weekly, the 100 weekly, the 200 weekly are still pointing up. So in my opinion, likely the worst case scenario is we pull down to the 200 and bounce. But we've barely begun to pull back. We're under pressure. We're pulling back. We're about to enter correction, but does mean we're going into a bear market. And the Russell just dropped below the 100. Kind of looks fine compared to the others. Is it weak? Yeah, it's weak. Does it look great? No, it doesn't look great. But does it look like we've been in a world of hurt for a long time? No, we're just breaking down. Highs were 5 weeks ago. We've been in a trading range. So can it go much lower? It certainly can, but that's the breakdown aspect. But what would it take for it to move higher? Peace with Iran, capitulation by Iran, the UN coming in, stopping the war and enforcing a nuclear arms inspections. I mean, something could certainly come out of left field, and that would be probably seen with a big rally. Now, if you want to believe it's going to break down on Monday, it closed at the high on the VIX. And if we just step back and look at some other times here, this is the highest the VIX has gone since the April 25th bottom. But if this market is still in trouble, we're going to spike. We've taken out the October and the November VIX peaks. So I'm looking for a spike. We got back to where we had here in March of 25. So if the VIX comes down, that's reassuring. And if the VIX goes higher, well, means the market's going to be under more pressure. And then the dollar had been rallying, and it's really doing nothing. Yes, it had a big move up, so to speak, but it's still very near the bottom after the recent sell-off. So that's my thought on the indexes. If we go and we look at the commodities, I have to ask Ravina. I can't, I'm not going to make that thing go away. So I like to hide it. It went away. All right, gold consolidating. We all know it had a very massive run up. It has now come down. Oh, I did not want that, did I? Let me hit delete. Well, is that not going to let me delete? Oh, good, it let me delete it. I want this one. So gold fell in a very short period of time of 5 days, including the weekends, 20.65%. It is now down. Test where it's at now. If we look at where it closed, It's now about 8% off of its highs. My anticipation is we're just going to continue sideways to higher. I don't think gold is done. Silver is consolidating at a little bit lower point closer to the bottom. And just based upon historical, looking at 2011, I wouldn't expect silver to keep roaring back. But, we're not living in 2011. This market has a mind of its own. Oil, as long as we have this stupid war, now let me be honest. My opinion, and only my opinion. Iran is probably the worst actor in this world from a power. I won't say superpower, but a power. They have been known to export violence and war. They have been known to arm belligerents, whether it's in Syria, Lebanon, Palestine, Israel. If they are developing a nuclear bomb and if they found the way to deliver it, I think it puts everybody at risk. So I'm not sure that this is the wrong thing to do. I just don't know that there's a plan. If we look at oil gapping up, as long as the Straits of Hormuz are blocked and as long as we're reducing the flow of oil, it takes a while for the U.S. to amp up enough production. Then as soon as that happens, the rest of the world will open up. But oil is on fire. Now, if you're owning oil or energy stocks, keep in mind that what comes up will go down. I remember in the 9/11 era what happened with oil and how fast it came down. So I'd be careful. Natural gas trying to get back to the 200 really not having the same response, although some of the LNG players are looking good because of the spike in LNG in Britain. The 10-year had a big reversal candle, so it was actually finished down 0.5% on Friday, but still well above 4%. Probably the weakness in the market's flight to bonds. And a similar candle on the 30-year, which was down 0.11%. Both of them are well off their highs, but frankly, they're also off their lows, so it remains to be seen what's going to happen with them. And there's gold again, so we can shut that down. If we look at the buckets are getting interesting. Look, we are not in a bear market yet. We are not in a massively sold off market. We're in an early phases of a pullback to correction. So I don't expect this to look like April 7th. But you've got 28% of the stocks in the NYSE are below the Bollinger Bands. 32% of the S&P 1500 are below their Bollinger Bands. 16% of the NASDAQ are below their Bollinger Bands. And 27% of the Russell 2000 are below their Bollinger Bands. That's an area where you start thinking about reversal. Now, I mentioned April 7th, and for those that haven't followed me long, the buckets basically slice the Bollinger Bands into 10 deciles, and they measure the percent B in every stock in the S&P 1500 or NYSE, put it in whichever decile it falls, and then you have those that are below the bands and those that are above. 90 to 95% of the time, a stock should stay within the bands. So when you start to have 20 or 30% below or above a band, it's probably telling you something. At bottoms, it's one of my favorite bottoming signs. I need to go to April 7th of 2025. It was not rocket science. It was just knowing the tools to say, oh my God, 76% of the NYSE is below the bands, 79% of the S&P 1500, 53% of the NASDAQ, and 66% of the Russell. That's about as bad as it gets. When I made my bottom call on April 7th, maybe it was rocket science, but it didn't take being a rocket scientist to figure it out. You just look for patterns, and that was a pretty substantial change. Now, the other market breadth tools we're looking here at the left on the NYSE, on the right, the NASDAQ. So if we just start looking at price and volume action, you start to see that the NYSE is now catching up with the NASDAQ, breaking below its 50. The NASDAQ broke out hard, heading towards the 200. Notice where the high jumps are. High jump of minus 5.66. That's in a reversal area. High jump of minus 100. Let me say this differently. Minus 5.66. I got fooled because it looks like it's really low, but it's not because it's just been up for so long. Oh, come back here. So if I was to go here, it's just been above. Here is minus 100. Okay. What we're at now is minus 56. There's no signal there. However, on the NASDAQ, which has fallen further and harder than the NYSE, our high jump bar at minus 100 tells me we are in an area to expect a bounce. All right, more saying a bounce could be coming. Down here, you can see the stocks above the various moving averages is falling hard and approaching the number seen on pullback here in November. Another reason to think we could bounce soon. Similar on the NASDAQ. And then the new high, new lows, the AD lines and the up-down volume are all negative. No new signals yet. And then if we look at the shorter term overbought, oversold, which is my 13-week new high, new low, you have 0.20 on the NYSE and 0.18 on the NASDAQ. Those are both areas where I typically start to look for a reversal. It can get worse. Just there's not much more room to go. If we look at market breadth in the 13-week new high, new low, you can see we are let me do this. 0.15 on the S&P 500. We are 0.3. Make sure I get the right bar. 0.14 on the S&P 1500. And as we just saw, we are 0.18 on the NASDAQ. And we are on the Russell 2000. We're also quite low. We are 0.14. So there are a lot of signs that we are near a reversal. And that 13-week new high, new low is like clockwork. It may not be Monday, and we could see a big sell-off at the open on Monday and maybe a recovery. And then maybe we have turnaround Tuesday. I just think we're going to bounce before too long. And let me tell you when it bounces if it's a meaningful bounce or not. Let's take a look at the sectors. These are not the ratio charts. Let's just go through very quickly and see what's working, what's not. Bitcoin's struggling here. It's off the bottom, but struggling still in a buy signal because it got above the WMA here, and at least on the dailies, the bongo's still blue. Technology has rolled over, pulled into the 200, a natural place to bounce, but well off highs. Similar to discretionary. Communications is just going sideways in a buy signal, but really doing nothing, no momentum. Industrials had looked great, has broken down from the 30-period WMA and the 21 EMA. It's heading into the 50 and was down quite a bit on Friday, down 1.23%, which for a sector is meaningful. Financials are weak and staying weak. Energy staying strong. And what is this? This is materials has broken down. Real estate is breaking down. Utilities has pulled back a bit, holding up okay. Staples, is it putting in a bottom? Is it bouncing? It might be, but probably too early to say. Where is the strength? Not healthcare. So as you could see, the sectors in general have weakened. And now let's look at some of our favorite holdings and a couple of my favorite sectors. So let's go here, blow it up. Amazon making a nice move. Had a great Thursday, looked okay on Friday, and then it sold off with the markets. Apple failing at resistance, so we'll see how far it drops. Google failed at support, failed at resistance. Looks like it might be going lower. Meta needs to get above the yellow line. Netflix, first red candle in days. I thought it would go higher. I still think it goes higher as it recovers some of that lost in the Paramount fight for Warner Brothers. Tesla, I wouldn't touch it till it gets above the yellow line. Nvidia going sideways, kind of like the whole NASDAQ is. Waiting to see it break. This was a false breakout around the time of earnings. And this is Microsoft actually flipped to a buy as it got above the WMA. Still got a ways to go for me to think it's done. LABU, I love to see it get back above the yellow line. I can tell you as I looked at individual stocks today, I was a little bit shocked how many biotechs are there. I think it may just be the absence of anything else. But LABU closed at a high, was actually up, I think, on the session a bit, 0.3, but needs to get above the yellow line. Software, nice steady uptake. Data centers pull back, actually has dropped below the yellow line. I'd like to see it rebound very quickly, like it did here. But that's not a good look considering that's where a lot of the market is betting on. What else can we do? This is defense. And I decided I think I'm going to switch to a different defense ETF, SHLD. Probably more of a pure play defense shield, and you could see it pull back and is moving higher. We'll look at the components of that in a few moments. And then you've got back to Amazon. Perfect. So now what I like to do is to go into the JAS layout. And the first thing is just to remind people that have my tool, if you flip to the ETFs, and it takes a second to load them, well, usually takes longer. We have done some stuff to speed things up. Let's find SHLD right here. Now, if I open up this little panel here, now I look for shields. It actually gives me the current components. So if this is what's working, and I think it is one of the ones we could go through very quick, AMTM, AVAV, BBAI, BKSY, BWXT. Finally, something that looks good, General Dynamics. Huntington Ingalls looks fine. Carmen is good. And these are the defense plays that actually look the best. So you can get the components of any ETF, which was the purpose that I wanted to show you. If we go into the impulse, we're going to see how many stocks made the screen. And the screen are the stocks in the NYSE, the NASDAQ, and the Amex filtered for $1 and 100,000 shares. And it's at 36.55. Now, before I go and look for longs, because why would I want to be buying longs until the market changes? I'm going to be looking for what breaks out, which things hold, but if I wanted to be long something, I might be looking at contra ETFs. And I did this last time, and it's not what I wanted to do, so I apologize. I wanted to stick over here, and I wanted to get the contra ETFs here. Notice they were all green on Friday, so the dog will go up if the diamonds go up. This thing is broken out and running. It could slow down up here, but as the markets get weaker, the contras will get stronger. FAZ will go up when financials are weak. It's had a good week. SOX will go up when the semiconductors goes down, starting to budge. SPXS is leveraged 3 times the S&P 500. When the S&P is weak, this will go higher. SQQQ will go up when the Qs are weak. And lastly, TZA will go up when the small caps are weak. These are not a bad place to be in right now. Again, since I do think we're going to see a sell-off and a recovery and end up higher quickly, I'd be careful of getting too heavy on the short side. In fact, I'd rather be in all cash right now and ready to deploy. And one thing I learned when I was young is if you lose your cash in a pullback, you don't have any free cash to go and spend as the market goes higher. All right, back to the impulse. Again, I do not want to find a lot of stocks tonight because I'm not advocating buying long unless we see a change. Let's look at the A plus. Nothing. Let's look at the A minuses. How often do we see nothing on the A pluses? ACI, Albertsons, I saw Kroger moving. I wonder if some of the federal issues that look like they were preventing their merger are evolving. So I can find out by clicking here and the news will open up. Or you can go through and read the news yourself to see if there's anything that's interesting there. Now, a couple of the next one are interesting. Costco. Now, my problem with Costco, and earnings are now out, that's a great thing, is Costco has a PE of 51. But look at this, its growth, its earnings have picked up some, and we're going to have 489 against a 428, so that's 60 cents. So that's 15%. So we're starting to grow double digits. That might be helping Costco. You can see Costco had this crazy day with the earnings announcement. They beat on earnings, beat on revenue, with a modest surprise on both. Open traded much lower, but actually closed up on the session. So that was pretty impressive with Costco. I don't play GameStop. Marvell, great earnings. We could see it was 80 cents, which was 33 and a third change and a little bit of a surprise. Revenue growing 22%, trades at a PE less than its earnings per share growth rate. It had a big breakout as well. And then one that I actually do have a position in, I couldn't help myself, was I took a position in Pfizer at the end of the week. And the reason I did that is because it pays a just under 7% dividend. And if I was a betting person, it's going higher. Now, it has sold off quite a bit. And let's put it on a weekly as soon as I can close all these windows. Close, please. There you go. There you go on the close. Come on. Thank you. We go to the weekly, and you can see Pfizer is well off of its highs, but it seems to me like it's channeling higher and higher. So Pfizer is interesting. Again, let's look at the fundamentals. Looking for 77 cents versus probably the 92. But it's not whether the number is good or bad. It's whether it beats that number that's going to determine where the price goes. The expectations of 77 cents versus 92 cents, I can promise you are already baked into the stock. And a 6.25, or what's the dividend at? 6.91 dividend in a blue chip is kind of incredible. All right. And Marvell had a great day, but it's already started running as far as I'm concerned. Let me make sure I close that. Come on, there we go. You can see Marvell, big move up on Friday. Normally now I would go top down, so if we just look over at the top down piece, you could see only one of the sectors were up on Friday, and if we look at the industry groups, You can see there's a smattering of them that are positive, but the majority of them are negative. I'm not going to do that tonight. Let me just show you a couple of stocks that look good to me on my review. Guidance. Someone's going to have to replace all the ornament. So let's get it off the weekly, which looks great. And we got a stock that, you know, little pullback here and a breakout retest. I think if the market holds, Guidant might be a play to hang out. I talked about Shield, the ETF. Most of these stocks are in it. That looks great. Huntington Ingalls, I think they make ships and aircraft carriers. Pull back to the 50. Any momentum to take this higher would be interesting. Again, if the market stabilizes. L3 Harris, another defensive play, pulling back here, looking for a breakout from the flag. Lockheed Martin, again, another aerospace. Must be because you're, oh, Lockheed Martin here is pulled back. Looks like it's breaking out here. Looks nice. RTX Raytheon. So in the land of ugly stocks, these guys actually continue to look good. So those are some of the ones that I think might do well coming out. UMAC is a drone maker. This is a war being fought by drones. The number of missiles Iran has keeps getting lower and lower, but they're using drones, and drones pack a punch, and you can control them. I just don't know what their range is, although I know they did launch long-range drones at one point against Israel. UMAC is a drones manufacturer, and a couple of biotech names that I'm looking at. IMRX. It's tight here on the 200, took out the 50, had breakout and momentum and a squeeze. I thought that looked interesting if it breaks out. Cura is another one early on. Biotech drug, probably pretty close to an approval in oncology. Is this ready to break out after the deep pullback? Outfront Media, big run, might be stalling out, but a break above this range could be interesting. And if we just look at, pays a 5.2% dividend. And what else do I have? Oh yeah, an oldie but goodie, Starbucks. Guess if we go defensive, you could kind of make the argument that Starbucks is either at or near a breakout position. And you had momentum breakout and volume from a squeeze with good relative strength and OBV on that breakout. That one looks really good. And on the energy front, one whose fundamentals looked interesting is Vista Energy. And if you look at the fundamentals, $1.75 versus 79 cents. That's that's over 100% move. You had 100% the prior quarter, 169 the prior quarter. Trades at a forward multiple of 9. Do you think that if it makes that number in April, this thing goes sky high? I do. I think this one looks interesting as well. Then a couple of ETFs that I think are fascinating right here. Excuse me. Junk bonds. These things are breaking down. I just would have thought if we thought the world was on fire, these things might be shooting higher. And then lastly, the RSP, which I alluded to earlier in a prior layout, but you could see it finally broke up, but it had been riding up the 17-day and 21-day EMA, but it's broken now. So I'll just sum it all up. My timing model is decisively sell, sell, sell. For me, I've raised cash and it's sitting on my hands, not chasing any shining objects and looking for that bounce. How will we know if we have a bounce? Well, maybe the day that it happens, I'll go give my bounce lecture because I have a number of symbols in this area. Let's just go back. Excuse me, I guess I'm more tired than I thought to and April, and you can see a whole bunch of things are firing there. I will show you what the notes about them probably one day this week. Have a great week. Be careful. Cash is a position. Don't overtrade. You'll have plenty of time to make money when the market goes up, assuming you have money left. Take care, everybody.